Whether you're dreaming of a retirement with sand between your toes and a cold one in your hand, hitting the road to chase the winds of adventure, or spending time with your grandchildren, this show is intended to help you get there. Welcome to Coasting in Retirement with your host, Josh Knoll. You've worked too hard throughout your career to spend your retirement worrying. So sit back and kick up your feet because we've got lots of financial tips and tricks to share to help you get exactly where you want to be. Here's Josh.
Hello, Lower Alabama. Hello, Gulf Coast. Welcome in. Welcome to Coasting in Retirement. Thanks for joining us today. Josh Knoll here, alongside no one. I'm flying solo today. Michelle is off this week. We are recording. We're here, beautiful downtown Fairhope. Beautiful weather. Ready to put on another great show for those of you tuning in. I'm just going to be doing it by myself. We'll see how that goes. It's heavy lifting. Listeners, we're here today to discuss financial topics relevant to those of you in or near retirement, living your best life along our part of the Gulf Coast. Here's what we've got in store. First, we're going to do a deep dive on our topic of the day, first segment. Second segment, it's roughly 30 minutes past the hour. We're going to do headlines of the week. We got some doozies for sure. And then roughly 50 minutes-ish past the hour, stick around for our third segment. We call it Josh's Crystal Ball and Big Mouth. We got a lot to get to. Quick background on me for those of you new to the show. Again, my name is Josh Knoll. I'm a fee-based financial advisor. I hold my FINRA Series 65 securities license, and I'm the owner of Gulf Coast Financial Advisors. That is a 100% locally owned, 100% independent investment management and financial planning firm. We have offices in Fairhope, Orange Beach, and Mobile. You can find more information on me and the team at Gulf Coast Financial Advisors by visiting our website, gulfcoastfa.com, or feel free to give us a call anytime, 251-327-2124. And if you just missed that contact info, grab a pen, grab some paper. We're going to repeat it several times throughout the show. This week, I wanted to take an opportunity with it just being me it's been a while since we've talked about what we actually do at Gulf Coast Financial Advisors, which seems like a fairly simplistic thing to do on the radio, but there's so many interesting topics in financial services and investment management and financial planning that a lot of times we may go on and on and on. Somebody listening to the show may say, well, I wonder what these guys actually do, because the one thing I can promise you is I'm not a professionally trained and or paid radio show host. I am a financial advisor. That is how my bread and butter. So what I wanted to do today was walk through the things that we do at Gulf Coast Financial Advisors, and also to give some context around how that relates to maybe some of our competitors or our peers. And I'll give at least my opinion on why I formed the company that way. So let's start with kind of the origins, if you will. Gulf Coast Financial Advisors, that is a company that I formed. I formed it several years ago, made a pretty significant change a couple years ago where I basically made it its own registered investment advisory firm, which in plain English means I cut out the middleman. I don't have a broker or a mothership, if you will. We deal directly with the various securities commissions as our standalone firm. And it was as with anybody listening, we have competitors and peers that listen to this show. Anybody that's done that exercise, it can be intimidating. It's you have, fortunately in today's financial services industry, it's never been easier to form a fully independent firm like we have, but that doesn't mean that your path is going to mirror exactly the path of other people that have taken, have made those choices. So you never 100% know. And also, as with most things, I was, probably moving. I was probably moving one step ahead. I've always done things where I'm being pulled along, where I'm not being pushed along. So this was definitely something that we did that at the time was pretty intimidating. In retrospect, and I had faith this would be the case, but in retrospect, it was the best career decision that I ever made, because you're never going to eliminate all conflicts of interest in our industry when it comes to servicing clients. But if you want to skinny it down to the bare minimum, being 100% independent, being fee-based, fee-only, being along that direction, you just don't have as much nonsense to deal with when it comes to servicing your clients. So Gulf Coast Financial Advisors, long-winded way of saying we are a 100% locally owned, 100% independent registered investment advisory fee for service planning firm. We are planning first. Okay. Now, that's all that to say is because the term financial advisor gets used pretty broadly. In fact, it's hard for me to find another industry where a term that is supposed to have a specific meaning actually is used so much that it has a very broad meaning. And what I mean is, you can you can slap the term financial advisor on somebody that's going to be working with your investments, and it could mean how they do the actual work could run a significant wide gambit. For example, in our industry, you've got kind of different lanes or silos, if you will, and of course there's bleed over on some of these lanes. But you have the insurance-based financial advisors, or registered reps. Sometimes they're called. Sometimes they're just called agents if they don't bother to get any type of securities licensing. But those are going to be typically associated with a large mutual insurance company, or maybe they are semi-independent and they deal with multiple different insurance agents. But the point being, on that side of the quote-unquote financial advisor space, they're going to lead with insurance planning to some degree. That's going to be possibly a combination of annuities, possibly some permanent insurance, or maybe even term insurance, but definitely some permanent insurance planning. In that space, there is a lot of focus on the index products, the fixed index products, whether that's on the annuity side with what's called fixed index annuities. That's really the hot topic in that part of the industry, or on the insurance, on the life insurance side, that would be index universal life. Those are really for the ones that are heavy producers in that side of it, the quote-unquote financial advisors. They are going to be pretty knee-deep in the fixed index annuity space or the index universal life space. We don't have time to dive too deep into whether that's good or bad. I'm just telling you how it is in our line of work. And then as you start sliding along the scale, you'll see a lot of hybrid type of advisors. What does that mean? That means that they do some type of insurance planning along with maybe they've got a securities license. Maybe they've got a type of license that allows them to sell commissionable securities products, i.e. variable annuities or variable universal life policies. Those are going to be with the fixed products on the insurance side. They don't have direct investment in the stock market. The securities licensing allows some type of investment. So, for example, a variable annuity, the difference between a variable annuity and a fixed index annuity would be more or less this. A variable annuity would hold your premium in what's called a sub-account that is actually directly invested into mutual funds and things like that. A fixed index annuity is going to hold your premium in an account that only mirrors a stock investment portfolio, like an S&P 500 index fund. It's never going to be directly invested. That's really kind of the two broad things there. But as you can see, we haven't even stepped out of the insurance side, and already it's getting convoluted, right? So as you slide along the scale, moving away from the insurance side, you start getting into the broker side. There still are a lot of advisors out there that do sell stocks and mutual funds on a commission basis. Now, I would argue that is becoming, if it's not already, it's becoming kind of the dinosaur, but there's still brokers out there. Somebody that is going to have a kind of a transactional relationship for the most part with their clients. I know some of them obviously will have a deeper relationship, but in general, they are paid by executing transactions. Hey, Mr. Client, I've got 1,000 shares of XYZ. Would you be interested in it? I think it's going to do this. Can't guarantee it, but hey, it's worth making a purchase. You make a purchase. There's a sales load or some type of commission paid on that. That's how that type of quote unquote financial advisor gets paid. Again, we're not here today to dive too deep into the pros and cons. That was historically how people sold securities in our line of work for many, many years. Can't tell you exactly when that shifted, but I would say definitely 10-ish to 15-ish, somewhere in that range. There was started to be a sea change away from moving from the broker side. Now, on the broker side, you can be with a large wirehouse or a brokerage house. Think Merrill, think Morgan, think Ed. And a lot of those people that work there are not necessarily strictly brokers anymore. A lot of them are their own version of a hybrid, if you will. They may not dip into the insurance planning side as much as my insurance brethren do, but they definitely have the ability to do what's called assets under management, charge a fee for some of the assets that they manage. And a lot of times, if you look at a fairly robust and busy broker that's working at a large wirehouse, they're going to have pieces of business kind of here, there, and everywhere. They're going to have some stuff that's buy and hold on the commission side. They're going to have some stuff that's actively managed on the fee side. And then some of the bank-owned ones are going to actually have some things that are even outside of my pay grade to describe, but they get fairly robust in the different places that they can place a client's money. And that's honestly, that's probably part of their sales pitch is, hey, we have access to multiple platforms. We're not just a one-trick pony. We can get you involved in these various things. And, oh, by the way, we can probably save you money on your car and your car loans and mortgages, right? So those sides, they can be with the big wirehouses on the broker side. They can also be with what's called the independent broker dealers. That would be an LPL. That would be, it used to be Commonwealth. They got bought by LPL. You got Cambridge. You've got Raymond James. That's a very well-known one down here. There's some really good Raymond James agents in this area that I know. So they're kind of kissing cousins there, but they got a little more independence. And then as you there's a point to the story, as you keep sliding along that scale, you start getting into the the independent registered investment advisory space. Now, again, there is a multitude of ways. There are advisors, fee-for-service advisors like me that work for huge, multi-billion, huge, larger registered investment advisory firms that are not at the scale that, they're still little runts compared to a Merrill Lynch. They're even small. They're even small when you compare them to like an independent broker dealer, like an LPL. But some of them are getting huge. Creative Planning, Edelman Engines. These are, I don't know how many assets under management they have now, but I would imagine both of those companies are approaching. They're probably getting close to one of them is going to be the first $1 trillion registered investment advisory firm, right? And there's scale with the argument there is going to be for scale. Hey, we've got we're on the fee for service side of the industry, but we've still got billions and billions of scale behind us to compete with the wirehouses. That's going to be the argument there, and they're not wrong. I know, for example, Creative Planning is what's called a roll-up RIA. That is when they buy your practice, when they buy a practice, they're going to rebrand under Creative. You're going to come into their set of ways that they do handle financial planning in their client's business. And there's argument to be made there, right? And then you have that. So as you've seen me describe these various parts of our industry, then that leaves the lane that we run in. We run in the independent fee-for-service RIA space. And for that you're really going to have the argument to be made with that, and I made it a little bit earlier, is first you're going to have just baked in. You're always going to have some conflicts of interest, but you're just going to skinny those down. I don't have a lot of advisors at the wirehouses and bank affiliated get paid through a grid. And that grid, there's going to be some incentives to do things that are, in my opinion, kind of fall outside of just the raw investment management, financial planning lane for a client. I'm not saying it's good, not saying it's bad. I'm just saying that happens with the independent space. There's no grid. I get paid directly by the client. The client does better, I do better. There is no proprietary products. I don't have. There was some little bit of heartburn. I can't remember which wirehouse it was. I think it was Ed Jones had a little bit of heartburn around some of the money that was getting paid by mutual fund companies to have access to their advisors, and how that could present a conflict. And quite honestly, it kind of does. Does that mean that it actually harms the client? That's a different argument. But in our line of work, I don't have anybody that is paying me money and any type of commission or referral fee or anything like that to have access to my clients. It just makes the argument a little bit cleaner. Client pays me directly. We use trusted third-party custodians like Charles Schwab so that the client always has custody of their own money. I just have discretion over trading, and off we go. Now, inside of that, so we've set the table. Now let's talk about what do we do with that table set. So let's recap briefly. If you're looking at quote unquote financial advisor on a sliding scale, and I didn't hit on every single one. There's types out there that maybe even with my multi years of experience and my dipping my toe in multiple facets of the industry, there's probably types of advisors out there that I'm not even familiar with, to be honest with you. But I'm talking to about the most normal retail facing type of advisor. When you're sitting across there, you could ask about half a dozen questions, and you're going to know what box to put this advisor in. Those boxes are going to be kind of insurance-based planning advisors. Then on the insurance side, there's going to be hybrid type where they mix in some type of asset under management component or securities component along with the insurance planning. Then you're going to be sliding over into the broker side. A lot of the brokers don't do a whole lot of insurance, but they still may have a mix of commissionable type of work that pays them per transaction, along with level fee for service stuff, which is more is intended to be a kind of a longer term relationship around financial planning. Then you keep sliding over. You start getting away from the broker side, and you start getting into the registered investment advisory side. Again, that could be multiples, different types of scale. You could have a huge firm like an Edelman Engines, which doesn't really have a presence down here, but I'm sure they'd like to, or creative planning. Those would be two of the bigger ones in the industry where they're going to be a registered investment advisory, but they're going to have what most would consider an in-house type of advisor. Usually that advisor's book is owned by the larger company. And then you keep sliding over, and you get into the independent side. That's where we operate, fully independent, fully local, and registered investment advisory firm. So what do we do with that? So with being a locally owned independent registered investment advisory firm, my argument is and continues to be is we're going to have probably the deepest in local involvement, community involvement. Typically if someone is an independent RIA, registered investment advisor, they are usually part of the community. They're working in the community where they live. We have 3 offices. Our home office is in Fairhope. I live in Fairhope. We have a satellite office in Orange Beach. I have a lot of activity down in Orange Beach. And of course, we have another office in Mobile. Mobile is where I started my career down here along the Gulf Coast. So I have a lot of ties there. So there's reasons why we are there. We're not just down here on the Gulf Coast. It used to be more of an issue. It isn't as much anymore, but you would have, quote unquote, local offices for advisory firms that are based out of Birmingham or Montgomery. They weren't necessarily local. With an independent RIA, generally speaking, the owner and or the representatives are going to be local. You're going to see them out in the community. Lord knows anybody's running around Fairhope, they see me at Walmart a lot because I got 3 kids and I buy a lot of stuff there. But you see us you'll see us at football games and soccer games and all that kind of stuff. We're part of the community. With that setting, then, what if you're going to be a more personally invested in the community, then it would make sense that you're going to set up your practice to be more personally invested in your individual clients, which leads us now to how is Gulf Coast Financial Advisors set up on top of that. The foundation is that independent registered investment advisory firm. Okay, great, fine. Now, what do we do with it? Are we just like the old brokers and we're just, slinging securities and hoping to make some money on the commission or whatever? No, that's a piece of our business, but it's only one piece. Are we doing strictly insurance planning around, annuities? No, that we're very comprehensive. So this is how we have intentionally, and when I say we have a team. Now, some of the things that are done at the Gulf Coast Financial Advisors, the initial setup was me, and it was after years and years of experience of, quite honestly, like a lot of you all that are mature people like I am, learning the things that I did not want to do, or learning the things that I just didn't think simply didn't work anymore. We feel like there is a certain lane that is going to allow us to succeed both in 2026 and beyond, especially in the age of artificial intelligence trying to nose its way into everything that we do in our particular industry and possibly yours as well. So with Gulf Coast Financial Advisors, what we decided to do was create a comprehensive financial planning firm that also functioned to some degree. I got to be careful here around compliance because we are not a family office, but I'm going to use that word. We wanted to give the functionality of a family type office to quote unquote, call it, regular folks. Usually a family office is set up for ultra high net worth, 10, 20, 30 plus million in individual net worth. The family office, a lot of times in the investment management and financial planning space, would have been people that are very close to the family, possibly even family members. And basically what they would, you'd have a family or a collection of families, small group of collection of families that would pay these group of people in the family office to handle all of their financial lives. Because you think about it, makes sense. Think about for those of y'all that have started a small business and you've had to use QuickBooks to keep on track of things, and you got spreadsheets and you got different checking accounts, and it can get confusing. Usually you get a CPA or an estate planning attorney, which we're going to talk about. We'll take that times a multiple if you're somebody that is dealing with millions upon millions of dollars and you've got businesses all over the place and you've got investments and some of them are illiquid and you got real estate. So they would form a family office to help consolidate the management of those investments. Now, how does that relate to Gulf Coast Financial Advisors? Again, we are not by strict definition a family office, but what I have created is an outsourced type of family office service offerings to people that maybe don't have tens upon tens of millions of investable assets, which some of my clients do, but maybe not all of them. But you've done a really good job of building an extraordinary life, and you may not need. You may not be at a level where you want to have 5 people that you're paying full time to manage your money, but you're at a point where you need to have a team that you pay a reasonable fee to handle the different parts of your life. Now, what are those different parts that we work with? Obviously, the investment management is a very critical piece. If you can't get the investment part right, the financial plan is never going to work like it needs to. And so with the investment management, we intentionally work with and just selected and work with a company called Aptus Capital Advisors. They are basically the back office trading department, research, portfolio construction that allows, think about it this way. Let me take a step back. If you were coming into my office and I was the only one picking the stocks and the investment, the ETFs and all that in your portfolio, and I was it, I better be really, really super talented. And the reality of it is, even if I'm super talented in 2026, I'm still fighting a losing game against all these other companies that have scale, all these other companies that have a lot of technology. So enter a company like Aptus Capital Advisors. We are not directly affiliated. They own their business. I own mine. But they allow me, now I've got the power of numbers. They've got people that, if you're, for those of y'all that do your own investments, there is nothing wrong with that. But what I'm telling you is I have a dedicated team, dozens of people that 8 to plus hours a day, 40 plus hours a week, all they do is analyze our investment choices in our client's portfolio. So again, for those of y'all have a busy life and you have a full-time career or even a part-time career and you're managing your own investments, and there's an argument to be made there around indexing and keeping your fees low. Don't let me come across as judgmental. What I'm saying is, even in my example, which I just laid out to you as a locally owned independent RIA, you're going up against a team of dozens of people that all they do is look at 3 computer screens all day, analyzing all the trends, all the investments. Are we looking at equities? Are we looking at bonds, looking at trends, looking at cost basis? And they do it at a scale with the billions of dollars where they're getting purchasing power that you simply just don't have on a DIY setup. That is a pretty powerful argument. And remember, that is just one piece of the entire experience that we offer at Gulf Coast Financial Advisors is this professional investment management. Doesn't mean we're never going to make mistakes or our clients can't lose money. No, of course not. It just means that you've got a lot of intentional, educated experience behind the choices that we're making in that portfolio. We're not just hoping that we get somewhat lucky on a stock pick or a fund pick, or, hey, this fund manager is the greatest ever, blah, 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 blah. This is a lot of thought, a lot of hours, and, good Lord, how many decades of experience, because you combine that support along with my own personal experience. And I've been doing this a long time. I've been self-employed over half my life, and I've handled a lot of money. I've handled a lot of investments. So I have my own experience to bring to the table, and you combine those two things, and I think it's a pretty powerful story. But guess what? That's only one part of the story. Because again, we lead with financial planning. So in the financial planning that we use, we have a software program called Right Capital that I'd put up against anybody. I think it's wonderful for clients to use. It's very intuitive. But in there, we can do retirement planning. We can do income planning. We can look at risk management, insurance. We can look at your benefits. We can look at cash flow, which is a huge, huge part of any financial plan. In fact, it's a key part. We can look at debt management if there is debt, and if there's not, we don't need to worry about that. Financial education. We can tie all of these things into one comprehensive portal that you and I will communicate directly. You, me, and the team will communicate through on this, and it basically. It's mathematical modeling and probability. I think the easiest way to think about it is if you're sitting here today at whatever age you are, and you're listening to the show because you're wanting to retire, or for some of you just want to be financially free and maybe still work, but only work because you want to. You're looking for GPS coordinates to get you there. Think about the days back when we didn't have smartphones, and even before Garmin's, and you'd go to you'd go to a city with highways all over the place, and you're pulling out this map. And young people don't understand, but sometimes you'd actually pull over into a gas station and talk to a real human being to get directions, and they'd tell you turn left at the big rock and turn right at the yellow house, and so on and so forth. But those days, now you have your phone that provides you, for the most part, usually pretty accurate anymore. Well, that is what we are doing with financial planning. You're telling us, hey, this is the destination I want to get to. How do we get there? We're coordinating the GPS coordinates. Then, on top of, we mentioned, so the financial planning is all done in-house, and that is combining all the mathematical probabilities and modeling and the technology that I have through Right Capital, along with my real-world experience. And guess what? We want to know what you think of your life too, because we're not here to just tell you, hey, you don't know anything. Trust us. We can show you the right way. That's not how this works. You've gotten to this point because you know what's best for you. So when you take that, it's an extremely collaborative approach that we have, where we're going to all work together, and we're going to make sure that if there's 5 different ways to get to where you want to be in retirement or financial freedom, we pick the most efficient path and we stick to it to the best of our ability. That's financial planning, all right? Then I mentioned the strategic partnership that we work on the investment management side with Aptus Capital Advisors. We also do a lot of tax planning with our clients. Now, some of the basic tax planning we can look at in-house. We are not CPAs or accountants, but for the higher level stuff, not just tax preparation, but how do we get ahead of this stuff, especially for those of y'all with a relatively complicated situation, we're going to turn to accountants and CPAs. We don't have a strict referral to any one particular CPA, and if we ever do recommend any of our strategic partners, you do not have to use them, obviously, but we are fairly fond out there in Foley. Sam Driver of, I think it's Johnson Driver, Northcutt and Slaughter, does a great job of staying ahead of this stuff. We will work with somebody like Sam. Doesn't always have to be Sam. If you have a CPA already, we're happy. A lot of times, we know most of them, a lot of them around here anyway, but we're happy to talk to that CPA. But there's going to be communication around. It's one thing for us to do a great job in investment management, and let's say we're making you. I'm just throwing numbers out. We're making you 8%, 10%, 15%, whatever the number is, right? But what if we can also work with a tax planning based CPA program a person combined with the technology we have, and we save you 20, 30, 40% in taxes? Now that's real horsepower. And you do that where, you're doing that. You're doing the tax planning to stay within the laws and the guidelines of the IRS. But there's so many things out there that the regular person that's not in this industry or is not in accounting or CPA may not realize all of the potential tax benefits and breaks that you have, especially you self-employed people. if you're a self-employed person making significant six-figure income, and you have for the last several years, and no one's had a conversation with you about a cash balance plan, then you need to reach out, because we need to have that conversation. Because there are certain things out there. Doesn't mean it's it's not a hammer in search of a nail, but if it fits your particular situation, you're talking about significant tax saving horsepower, right? And then along that line, we got two more strategic partnerships to discuss before we wrap up this segment. But estate planning is so important, especially again for everyone has an estate. Some of you all have very complicated estates. And so we're going to work with estate planning attorneys. We've got some great referral partners that we use. Again, you don't have to use them, but we have people that are really in tune with how we're trying to service our clients. And we're going to walk through together what needs to happen. Our job is, again, we're not accountants, nor are we attorneys, but our job is to, if there's funding or accounts that need to be set up alongside your estate planning, we're right there. We're all singing in harmony. This is all about forming your financial team. Remember I said earlier, kind of similar to a financial office. You're getting a lot of the same service and benefits that an ultra high net worth person may get, but you're getting it for a fraction of the price, because you're not paying for our full time all the time. But you're paying for our expertise in a particular moment when you need it. And then lastly, I would be remiss not to mention the risk management planning. Here, again, strategic partnership, you don't have to use them, but we lean very heavily on Jay Stubbs and Providence Partners and Providence Benefits. Decades and decades with him and Andy of insurance experience. They have the right approach. Like all the rest of our other strategic partnerships, they own the business, which is really important to me. Generally speaking, if I'm referring you to someone, I'm referring to another fellow business owner, because I want the buck to stop there. And with Jay and his group, they've got access to dozens of A-rated insurance companies. They've been in business for decades, if not centuries, that are around long-term care planning, around income planning, around risk management, life insurance, all that. And any of you all that have ever dealt with Jay or heard him, he's a regular co-host on this show. If you've ever heard Jay, he's just really sharp, and he's got a great voice, and he's super educational on educating our clients around what their options are around risk management. So, all right, in summary, what we do, Gulf Coast Financial Advisors, full comprehensive financial planning. I think it goes a step beyond that, and the fact that we have developed over the years these deep relationships with the people that help service our clients, whether it's estate planning attorneys, whether it's CPAs, investment management, all that. We bring all of those relationships to the table, and we make those introductions, and then we work together as your financial team together. That's what we do. And we do that on the independent registered investment management side of the business, which not for everybody. Some people like that name brand. They like seeing the commercials at night on TV. I get that. But if you're, in my opinion, the most personal touch that you can get, and the buck stops here. I am in the community. We're here. Then I think that, in my opinion, the independent registered investment advisory, fee-for-service advisor, I think that's the way to go. So, but if you're interested in setting up that kind of conversation and learning more, you can give us a call at any time. It's called Gulf Coast Financial Advisors, 251-327-2124, or find us on the website. That's Gulf Coast FA, so FA is in financialadvisor.com. Now on the site, in the upper right-hand corner, there's a blue button that will put something on my calendar. I got 3 different ways for us to have our introductory meeting, and all of them are there's no charge. It's totally free. But you can do a 15-minute introductory phone call. You can do a 30-minute Zoom, or my preference, I'm old school. I like meeting in person. Let's meet in person. We have 3 office locations. Again, we're downtown Fairhope, right off Fairhope Avenue. We have an office in Orange Beach. It's just right down the road from the wharf off Canal. And then we have another office in Mobile. It is near the intersection of Dolphin Street and I-65. But however you reach out to us, make sure you do. We would love to meet with you. All right, folks. That was a lot. Woo! Coming up next, what's going on in the world? There's a lot going on in the world, too, particularly the world of finance, investments, and money. Every week we scour the internet for financial articles relevant to those of you in or near retirement. And we're going to give you our honest opinion about these headlines. So join us after the break to hear this week's relevant headlines in our News of the Week segment. Stay tuned.
multidimensional financial services company, Providence Partners serves the needs of independent insurance, financial, and employee benefit professionals. The team at Providence Partners serves other business professionals like property and casualty agencies, registered investment advisors, community banks, and benefit brokers to assist in their clients' risk management planning. Whether an individual or business owner client, this planning includes income replacement protection, planning for extended healthcare costs, family needs, and generational transfers of wealth. At Providence Partners, we give you access to industry specialists. Those specialists focus on business succession, business owner planning, family and household protection, estate planning, planning for that income loss, or planning for long-term care solutions. Providence Partners is an Alabama-based company. We have offices in Birmingham and along the Gulf Coast. Our website is providencepartners.org, and you can reach us any of the working days.
Welcome back to Coasting in Retirement. Your host Josh Knoll here, flying solo today. Michelle is off this week. She'll be back next week, and then we also got Jay Stubbs coming in, so we got some pretty exciting shows coming up. We're looking forward to it. So as we discussed before the break, every week we scour the internet for financial articles pertain to those of you in or near retirement. Our job, or at least we tell ourselves it is that to help you all understand how these headlines impact you, especially when it comes to your money. Now, quick note, if you want to read our referenced articles yourself, we include the hyperlinks in our show transcript, which my son Peyton will put up on the website the day after this show airs on FM Talk 106.5. Just go to gulfcoastfa.com, go to the podcast tab, look for the show that you want to research further, and you will find the article links there. And in general, we try to make the articles without paywalls. And we also we can never 100% verify all the information in all these articles. That would take too long, but we use reputable sources. You know, I mean, we're going to be going down paths where we trust the company that's providing the information. Speaking of trusting, let's get to our first article. So this one is found on Yahoo Finance, and I think it originally was a Market Watch article. Market Watch, for those of you all that want to be more heavily involved in the industry, that's a pretty good resource. Yahoo Finance is good at aggregating articles like that. I would say Morningstar is probably online with Market Watch, and then the Motley Fool. Those will be kind of three that seem to be similar in some of the topics they go after. But anyway, this one is a pretty timely one for those of you all that pay attention to the recent inflation numbers. The article is titled, quote, "High inflation is pushing yields to 5% on Treasury bonds." So this one's a little jargony, but this is why I wanted to bring it up, because it's important, because there's going to be a lot of conversation around inflation and interest rates. We just recently had the confirmation of the new Fed chair, and there's just going to be you're going to be, depending on cable news, newspaper, wherever you get your news from, there's going to be a lot of conversation on where is inflation going, where is oil pricing going, consequently where are interest rates going. And basically what happened here is, for the first time since, back to this article, for the first time since I believe it was 2007, the rates on long-term government bonds exceeded 5%. So what does that mean in plain English? What that means is it's a couple different functions. One, whenever the government sells these securities, they've got to sell them into a somewhat competitive environment. Now, of course, because it's a federal government and there's no investment, it doesn't involve some amount of risk, but all the stuff that are sold by the U.S. federal government, are considered backed by the full faith and going to be paid back. Whatever interest they promise is going to be paid. Whenever they mature, they're going to be paid back, right? So they get to, as opposed to say like a corporate bond, or even a municipal bond, even a state bond, those are going to have to, generally speaking, charge a little bit higher or pay a little bit higher interest to be competitive, because where states, generally speaking, don't default on their debt, municipalities have, and certainly corporate bonds have had issues in the past, even with well-funded companies sometimes, but even especially in the high yield, fancy way of saying junk bonds. Any of you all that were investors in the 80s, Michael Milken, junk bonds, that kind of blew up. So anyway, back to the point being, even with that said, with the federal government being able to charge, or to be, pay probably in retrospect or in comparison, the lowest rate, they still got to be competitive. And investors are going to be demanding a certain amount of interest paid. And in this case, it jumped up above 5%, which what that is telling you, if you want to look for truth serum in our industry, it's obviously I listen to a lot of news, and I listen to a lot of podcasts, and I read a lot of news. I do that anyway, but having a radio show definitely puts some pressure on to be up to date every week on all things financial around investments. But sometimes a lot of the stuff that is on there is just nonsense. It's just trying to sell you something or scare you into doing something or get clicks or whatever. The true serum is going to be, generally speaking, if you're looking out 10 years, and investors are going to tell you what they think is happening in interest rates. So what does this mean? Now, this treasury bond that they're talking about, the long bond, that's a 30-year treasury. That's a long, long time. But the point being is when you're looking out a long-term 10, 20, 30 years on these treasuries and federal securities, if the interest rates are trending up, that means that no matter what the news is telling you, that investors en masse think that interest rates are going to rise, i.e., they think that inflation is going to be a longer-term problem than maybe what you're being told. Okay? I'm going to say that again. If long-term rates are trending up, that means that investors en masse, the wisdom of crowds, think that inflation is going to be around longer. So your main takeaway from this is, and maybe some of you all are actually long bond buyers. I doubt it, but maybe you are. Your takeaway from here is the investing class and the wisdom of crowds are telling you that you better be buckled up for inflation. And the reason that this thing made the news was that usually if there's a 5% offering from on a federal security, there's going to be significant demand. There wasn't this time. I'm sure they sold it. I don't have the article doesn't say how the bulk sale ended up going. I'm sure that they sold out. But the point being is there wasn't as much enthusiasm, and those are a couple of key indicators for you all that are paying attention and worried about inflation. That ignore some of the nonsense being told you that there's going to be somebody's got a magic wand to wave and inflation's going to go away. I fell into that trap a few years ago with one of my biggest predictions. It ended up being just totally wrong. When I thought that they had a handle on inflation back in 2022, they did not. So keep an eye on that. One of the ways that you can stay ahead of inflation, it's going to be tough if inflation is high. So think about if inflation is 3.8, is what they announced on the CPI core price index, and they're paying a 5% bond. That means your raw math is a 1.2% real return. That's tough, right? And I'm going to tell you that CPI 3.8 is probably low anyway, because there's just certain things that get carved out. A lot of the inflation numbers that are sent to you all at this point there's a lot of political maneuvering around them more than there should be. It should just be math, but it's not. So point of all that rambling is it's going to be tough for bonds unless we see a rapid increase in the interest, the yield from that. And if you see a rapid increase in the yield, that means bond prices are going to go down. Yes, there's a lot going on. Unless that, and even with that, it's going to be hard to stay ahead of it. If you're looking at staying ahead of inflation, what these numbers are telling you is you better be paying attention to the equity part of your portfolio. If you're over indexed in bonds, you may feel safe. You're not. And you need to take a look at your portfolio, which we can help with if you're interested in that. 251-327-2124. All right, let's go to our next article. We got Fox Business coming in here. Oh, here's a broad one. How much do you need to retire? A state-by-state breakdown. Retirees on fixed income feel the strain most. Well, yeah, duh. While location plays a major role in financial comfort. Oh, yeah, I could have told you that. So in this article, I wanted to pull it up because this show is obviously broadcast out of the Gulf Coast, Alabama Gulf Coast. We live in the Gulf Coast. And generally speaking, having lived in Missouri a good chunk of my life and lived at different parts, lived in a city, lived in the country, I would say in general, even down here in hoity-toity Eastern Shore, Fairhope area, things are still relatively affordable. I know it may not feel that way, but compared to the rest of the nation, they are. And in this, it gives you some numbers. Here's really, without belaboring the point, I think the one that's most interesting. It says that for a retiree to live in the state of Alabama and cover their necessities, they need about $33,000 in recurring income, which if you've done a decent job of working, or not a decent job, if you had a work history that allowed for Social Security, then hopefully maybe that's going to come close to that number. But then the more important thing is that's just getting by. Any of you all have ever lived on $33,000 in current terms know that that's a tough row. Take that number and double it. So you need at least 65-ish thousand to have a comfortable retirement, and I think that's just a starting point. So really what this is a tee up for me, for those of you all that are trying to figure out the numbers. A big chunk of what we do in our retirement planning and our financial planning is look at what does it take to live, what's it take to live your lifestyle. Especially we're going to be fairly adamant on, let's make sure those numbers that you're giving us around, what you're spending on eating out and traveling and gas and all that stuff. Let's make sure that's accurate. And then we're going to do a pretty extensive cash flow analysis, and we're going to look at inflation. We're going to counter that in. We're going to look at the assets that you have. Do you have Social Security? If so, when is the best time to turn it on? Do you have any pensions? What are your 401k or 403b assets? What's your cash? All that. It's all going to go into the mix, and we're going to use that as a way to look at how can you have the retirement that you want? Are you going to outlive your money, which is one of the biggest financial fears you're going to have? And can you go into retirement, semi-retirement, full retirement, whatever it may be, and still live like you want to without just constant stress? And for those of y'all that are on the other side of the equation, where you feel that you've got some, adequate assets, how do we make sure people are living longer than ever? How do we take this bucket of money, let's say you got $1 million, which sounds like a lot of money, and it is, but if you had, $1 million from 30 years ago has maybe, and I mean maybe 20% of the purchasing power it had 30 years ago. So guess what? Inflation's not slowing down. You live 30 years in retirement, that $1 million you have right now, you can probably discount the purchasing power of that $1 million right now by 80%. So what are you going to do to stay ahead of that so that in 30 years you don't have $1 million, you have $3 million or $4 million, which is the equivalent of $1 million today. That's why it's so important how you allocate your assets and set up your investment portfolio. And we can definitely help with that, okay? All right, we got time for one more article. I went a little long in segment one. Sorry, I get teased a little bit about how much I over-explain our industry, but I find it fascinating, especially because, again, the term financial advisor just gets put on everything, and we could not be any different. We just are totally set up different. So I always find it fascinating to lay that out, especially the lane that we run in. So let's do one more. Let's see here. This will help me lead into, we'll just combine into segment 2 with segment 3. Fortune magazine, or was a magazine, it's just a website now, but it has a recent article right off the press called "White Collar Workers Are Quietly Rebelling Against AI, Artificial Intelligence, as 80% outright refuse adoption mandates." Okay? So first thing I'll tell you, anytime you see a statistic in a headline like this, in my opinion, 86% of statistics are made up on the spot. So I would be dubious of that 80%, but I'd say the overall sentiment's probably accurate in that I can tell you that we are right now by these large AI-driven companies. Think Google, think Facebook, think Amazon, Tesla, all that, right? NVIDIA. I mean, we are being told right now that artificial intelligence is coming for our jobs, depending on the industry we're in, especially if you're white collar, and that there's nothing we can do about it. And I've started banging this drum a little bit in the past episodes. Yes, you can do something about it. We don't have to just sit here with our hands tied while they're stroking our hair and getting ready to cut our head off. We don't have to sit back on this. There's obviously going to be change. Life has changed. I've been on Earth since the mid 70s, and the world that I was born into is radically different than the world I live in today, right? And so the point being is, yes, there's going to be change, but we don't necessarily have to blindly accept this. And one thing is, from an investor standpoint, that I want you all to understand, investor versus workplace, is Right now, investors are rewarding companies that are cutting jobs and pointing to AI efficiencies as the reason. But the reality of it is, and this article talks about it, is those efficiencies are sometimes smoke and mirrors. They're not actually happening yet. Yes, smart companies are using AI. We use AI to some degree in our company, with our company, because it helps us execute tasks in a more efficient and quick manner. But we're not doing it these companies are positioning it as it is a one-to-one factor where they can take one employee and replace them with one chatbot or agentic AI and have just the exact same type of experience for the customers, and especially for the workforce. That is not the case. So you can be skeptical of where all this is going, especially you all that are in the white collar space. No, we don't have to just sit back and say, okay, fine, we're going to have 10 incredibly wealthy companies run by incredibly wealthy middle-aged white guys controlling all the money, and the rest of us are not going to have any jobs. That's not the outcome where this will work. It will not work. It won't work for us. It won't work for China. It won't work for anybody. So there's going to be a path, and we are exploring this. Just as I feel we were a little early jump on being critical of crypto, we are critical of this AI replacing all of our jobs, and we're going to do a lot more research for you regular listeners or you new listeners. Stay tuned, because we're going to be deep diving on this. All right. Well, obviously, regular listeners know I didn't have time to get to the crystal ball, but the AI is definitely something that we do a lot of predictions and analysis over. So I'll be looking forward to that. If I am making a prediction here, the AI job apocalypse is overblown, simply from a fundamental standpoint of that there's too much smoke and mirrors right now around it, and we'll talk more about that on our next episode. But until then, if you all would like to follow up with us and set up an appointment, just give us a call, 251-327-2124. Our, again, website is gulfcoastfa.com. Blue button, upper right-hand corner. Put something on my calendar. Let's meet in person. Offices, downtown Fairhope. Office in Orange Beach, and a third office over in Mobile. Make sure you reach out to us. Folks, that is our show for the week. I want to give a huge thank you to the producer of the show. That is Peyton Knoll. He's having to produce this quick because we got busy this week, and that's why I'm recording solo. Thank you to our show sponsor. That's aforementioned Mr. Jay Stubbs and Providence Partners. Thank you to our awesome radio station. That is FM Talk 106.5 out of Mobile. And many thanks to the provider of our show music, that is local band Sloth Racer. Now, I almost forgot. One last request. Folks, we are nominated in 2 different Nappy Awards for the local magazine we have called Lanyap. The show, Coastal Retirement, is up for Best Lifestyle Radio Show. We'd appreciate your vote there. And then my firm, Gulf Coast Financial Advisors, is up for Best Financial Planner. They lump it in with Investment Banker. I don't know why, but we're up for Best Financial Planner. We'd appreciate your vote. Go to Vote Nappies. I think it's votenappies.com. You can find it 2026. But anyway, thank you all that have been listening and joining us on this journey. We'd love to be a part of your journey as well. Till we talk again, have a wonderful and productive week. This has been Coasting in Retirement with Josh Knoll. Gulf Coast Financial Advisors, LLC, known as GCFA, is a registered investment advisor offering advisory services in the state of Alabama and in such other jurisdictions where it is registered, filed the required notices, or is otherwise excluded or exempted from such registration and/or notice filing requirements. Registration does not indicate or imply that GCFA has attained a particular level of skill or ability, nor does it constitute an endorsement of the firm by the Securities and Exchange Commission, the SEC, or any other state securities regulator. The Coasting in Retirement radio program serves mainly to disseminate general information, including those pertaining to GCFA's advisory services, together with access to additional investment-related information, publications, materials, and links. The publication of this radio show should not be construed by any client and/or prospective client as GCFA's solicitation to effect or attempt to effect transactions in securities, nor should be interpreted as GCFA providing personalized investment advice or any type of professional advice for compensation wherever this program is broadcast. Any subsequent direct communication by GCFA with a prospective client will be conducted by a representative that is either registered or qualifies for an exemption or exclusion from registration in the state where the prospective client resides. Certain information, news stories, headlines, data, charts, graphs, figures, or statistics presented on this radio program may have been obtained from third-party sources that are believed to be generally reliable, but which GCFA may not have independently verified. GCFA does not and cannot guarantee the timeliness, accuracy, or reliability of any such third-party information and undertakes no obligation to update or correct any information that may become obsolete, unreliable, or inaccurate. This radio program also contains the opinions, views, and perspectives expressed by Josh Knoll and any other GCFA representative, which are solely their own and do not necessarily reflect the opinions, views, or perspectives of GCFA as a firm. Such personal views and opinions should not be construed as endorsements or professional advice from GCFA. GCFA makes no representation or warranty regarding the accuracy, completeness, or reliability of any information on this radio program and disclaims any liability for any direct or indirect loss or damage incurred from using or relying on such information. GCFA and Providence Partners are not affiliated, nor are any of their respective representatives.